D.
I like the Whopper up there. Retireholics is a Whopper. That's pretty solid.
Just don't tell Burger King.
I couldn't tell you the last time I had Burger King.
No.
Just
You don't
not
like a
in-
rodeo burger?
What's that?
You don't like a rodeo burger?
Not a
I'll
Burger
make
King.
my kids go. I'll make my kids go to Burger King just so we get rodeo burgers.
Well, no, I used to eat them
dude,
when I was a
rodeo
kid,
burgers.
like
Rodeo burgers are good.
Whopper
I-
Juniors, all that. Like, yeah, I'm
have a
just saying it's
question.
weird that like it's not a place I ever think about anymore.
And I'll drink for this. Are CITs to McDonald's as mutual fund is to Burger King? Isn't Burger King just kind of going down? I mean, McDonald's is kicking the shit out of them, right?
McDonald's is doing well.
Oh yeah, sure.
I don't go to those places. And I have 3 kids. I've never taken them to a fast food restaurant.
That's such a lie.
Swear to God.
That's such a lie.
Oh, wait. I take that back. I would take them for, what's a little ice cream that you get with the stuff in at McDonald's, like the
McFlurry.
McFlurry. Yes, but they've never had like hamburgers and French fries and a prize at McDonald's. I didn't do that shit to my kids.
I do not believe you.
You didn't give your kids a Happy Meal? A Happy Meal?
Is JD gonna sing?
A new intro, I guess. I guess this is our new. I'm feeling some like new changes to our. I don't know, whatever you in the visual world call this.
I think that's more of a throwback to the old days. Brandon used to
Really?
make our shows, and
Oh.
I asked him to make one for this week. Said, sets off the tone sometime. Just make us a new one. Make us a new one. So apparently he was in a country mode. Welcome everybody to another episode of Retireholics. You little 401k weirdos. You're here again. My name is J to the D. I'm with Nerdy Chad Johansson, Justin Silent J McNeil, and drum roll, please. Tap, 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 tappity tap, tappity tap, tappity tap. Everybody's favorite retireholic guy. Here's the deal. I'm coming at you from a hotel room in Miami, specifically Coral Gables, if anyone knows what that is, in the Miami area. I'm out here visiting my son at
I
the
like frat row.
University of Miami, and I am at the Ritz Carlson, of course. I know most of you would guess that. I ran into a little bit.
I'm surprised you don't call it the Ritz Carlson.
I want to apologize up front, not like last time, but in all seriousness, I was at the pool with my wife, and it was 2:00, so I started drinking, and I'm like, because I'm used to prepping for the show, you know.
I've been drinking a lot of vodka in my free time, and
and I thought to myself, okay, it's 2:00. Like, I'll start drinking, which is normally what I might do at home in Cali. But then I realized I was on the West Coast and the show didn't start till 7:30. So in effect, I was drinking at 11 a.m., my normal prep time for the show. So things might get a little messy as we go along. But
Well,
They usually
you and
do.
time zones don't get along. How you don't understand how that works?
yeah.
Neither do Coast because he's on the West Coast.
What I do not want to forget is the wheel of ice. So let's just be safe, shall we?
Oh.
Let's just spin
the wheel of ice, the wheel of ice.
Oh.
Have fun coaching soccer, Mark.
All right,
Speaking of
okay.
Wheel of Ice,
Dude, it's
Was
been
that
a
an event on-
really long time since I had to do this, so I can't complain.
I was at an event on Sunday, and about 3 or 4 people came up to me saying, "Hey, dude, what did JD do? What did he have to apologize for? Did he piss someone off in the industry?" I'm like, relax. No, that's what it was.
Yeah, well, I ran
That's all.
into Matty Hunter, a First Eagle, at a Linsco private ledger event in La
He was one of
Costa.
them.
And he said, I knew right away when I read that was just clickbait. Let's go straight to headlines, shall we? Headlines, Brandon, headlines.
Chad, your daughter's watching the show?
Yep. She
Really?
can't hear you though, Mark. She can't hear you.
Phew.
Oh, thank goodness.
The good old people at Plan Advisor magazine have an article titled Guideline Launches Starter 401k Retirement Plan for Small Business. The new program, Starter, creatively named Kevin, will compete with the state-backed individual retirement account programs according to Guideline. Do you all remember the what's it called? The Starter K?
Starter K?
Yep.
And the details around that. So what is that? Looks like an individual retirement account. They're capped out at like 6K or something, but it happens through your employer. And what are the
Individual
other?
retirement account limits, but with some of the flexibilities of a 401k.
No
There's
testing.
loans in there. There's no testing. There's no company contributions.
Automatic
You know what?
enrollment, though.
Time out. I had this conversation with a client the other day that asked a certified public accountant that asked this question. There is still testing, guys, because you can still have eligibility rules. You can still create exclusions. You still have to make sure they're not exceeding limits. All of those things are still compliance tested. There's
So-
still requirements there.
But
Is a third-party administrator doing that, or is it the record keepers?
well, so this is a record keeping solution, but they
Well, I know
clearly
that.
say this, Chad, and I don't want to get into the weeds of like a company's responsibility to their employees, because obviously you have to like pay them properly and do certain things properly. But Guideline says right here, or this article says, Guideline's offering is exempt from Internal Revenue Service non-discrimination testing.
I have to imagine it's just the testing of the average deferral percentage testing. That's the biggest
That's
one,
it,
right?
yeah.
I mean,
That's the non-discrimination, right?
Mhm.
Limits testing is not considered non-discrimination testing.
You're right, Chad. I stand corrected. Because then it goes on to say it has fewer compliance needs. Anyways, I'm not going to ask our guest Rob to comment on the starter plan from Guideline. Rob, are you familiar with Guideline and the success of Guideline at all?
Not so much. Not so much. JD.
Okay. Well, they've brought on about 40,000 plans in the last few years, but yeah, don't sweat it.
I don't, by the way, JD, I don't fault them.
bastard.
I mean, remember when we first read some of these changes to legislation, I came to you and I said, I think we should specialize in this. We thought about it a decade ago with the simple 401k. And now I think that there is a space in our industry for the starter 401k. I really do.
There's another thing to take note is they talk about later in the article that Guideline anticipates this being pretty easy for these clients to elevate or evolve to their regular 401k programs. So it might not be, they're kind of giving it away. It's $39 per month and it's $4, excuse me. Yeah, $39 per month as a base and $4 per month per active. So call it a $468 base and a $48 per year per active. So, 10-person company, you're just south of $1,000 or $950 or whatever. So it's pretty cheap, but if they can bring in a lot of these, it's a great marketing opportunity to kind of move them up to regular 401ks as they kind of grow and mature a little bit. So I don't know, we'll see, but you're right, Chad, when we first talked about the starter, and just to remind everyone, it comes out next year, right? It's available next year. We had thought like, will record keepers jump into this? And I thought for sure record keepers would offer a solution, and that's exactly what Guideline is. And then you're just bringing up another point. Well, maybe the TPA could too.
Oh,
I honestly, my thought when we discussed who's going to roll something out quickly, it wasn't the record keeping space that does not have asset management. It was the record keepers that have their own funds that they could shove into the program and garner some new assets and payroll. Right, Mark. So I was a little surprised to see Guideline be the one that pushes this out.
I think those are going to be some pretty small assets. So I doubt those companies are super motivated.
Depends on how many you bring on. But yeah, it does have to have auto enroll. It does have to have some compliance related features. What do you think is going to happen when they set up a starter K with no non-discrimination testing and they flub how to auto enroll people and run the plan correctly? There's still going to be lawsuits. There's still going to be issues.
or people put in too much. And you're right. It's not, we won't call them 402G limits, right? But there's something else. You got to stay under the 6K or whatever.
Yeah.
I got a bunch of stuff to talk about, but let's first intro our guest, shall we? I'm going to kick it to you, Silent J. I'm sure you've done lots of homework. You've got something.
Tons of homework. Yep. I'm just going
Who
to do
is
this.
sitting in the middle of us here? Who is here?
I'm just going to take this now. Okay.
But that's only for one.
No, that was at least 2. I'll get more later.
Oh,
Anyways, someone who finally got the memo to dress in black. Today's guest hails from Washington, but joins us from the greater Boston area where he resides with his wife, 7 kids, 4 huskies, 3 piglets, and 1 owl. To ensure he's helping advance in the industry, he participates in several organizations like Spark, Retireholics, and soon to be Alcoholics Anonymous. He's the king of ESGs, the CEO of the Bland Brown Suss Company, Mr. Rob Barnett.
Holy shit.
That was pretty
Congrats,
solid.
Rob.
Good job, Justin.
Thank
I
you
could
for-
barely keep up with that.
Yeah.
I feel like Justin was like
Booze just helps.
right there. Like that was like 5 acrosens.
I know. I only really understood 2 of them because he was slurring his speech already.
Rob,
What happens
Rob,
when you drink?
I don't tend to do this, but I'm actually super excited to have you here. So I kind of want to jump straight to some of the things that you spend your time thinking about.
Well, that's a hell of an idea, JD. Why don't we do that? Because that's the point of having a guest. Yeah, it's a great idea.
And because I'm excited about this stuff. These shows help me learn and continue to dive a little deeper into things. And I hope the audience is going to come along for the educational ride here. I think we talk on this show to a lot of record keepers. We talk to mutual fund families. We talk to advisors. We talk to leaders of aggregators, these types of things. But trust companies or custodians, and Rob, can I ask you, can I use those words interchangeably? Are that kind of the same thing, a custodian or a trust company?
It's really the other way around. So the trust company is the trustee of the collective investment trust. So I'm going to try to remember to say that every time.
Boo.
Versus the
Just mean
and
as
as
a
the trustee, they are the custodian. So
Okay. But the business model, when you refer to, like I refer to different companies as custodians, like Matrix / Broadridge now, and Schwab and Mid-Atlantic, who I think was bought by a company we were on American Trust at their conference on their stage with Mr. Moody. These are trust companies and custodians. I can use those words. No, yes, maybe
you
not.
can, yeah, you can, because they are a custodian, but they all have a trust company attached to them. So one way to think about it is they do have the ability to launch CITs. Some of them do, like, Broadridge Matrix. There we go. There was one.
You can always finish your thought. And then Great Gray, and if everyone's not as smart as Rogue Guy, that is an owl, is a leader in the collective investment trust market. That's going to get good when I get drunk. With over, and I'm just pulling this from the website, but with over $144.5 billion in fund assets across funds managed by 70 plus sub-advisors, and maintains trading agreements with 40 platforms that access 200 plus record keepers. I get everything there except for the platforms. What are these platforms you speak of? Trading agreements with 40 platforms that access 200 plus record keepers. What are these platforms?
Well, we're going to give shameless plugs to a bunch of people tonight, right? Given some of the questions.
Blurp it up, bleep it all out.
So a platform is Broadridge Matrix. So Broadridge Matrix clears for a number of independent record keepers. And so if you add those up, right, it gets you to those kind of numbers. So that's what a platform is.
You are not, who are your competitors? Are your competitors not? This is this learning fun we're going on, everybody. Okay, so come along with me.
Learning fun.
Are your competitors Broadridge, Matrix, Schwab, Benefit Trust, Pershing, Mid-Atlantic, and the American Trust? Or no, are these are potentially strategic partners of yours at times, or are they both? What am I not picking up here?
I think they're competitors and strategic partners in certain ways, right? So depending upon the platforms, all of them are open architecture, so they allow us to trade our collective investment trusts on their platform. And some of them may offer collective investment trusts as a solution to their platform as well.
So you could literally be partnering with some of them at the same time competing? You're starting to answer a bunch of questions I had later down the line, because is another job you do at Great Gray is I'm being funny here, but if the Retireholics were going to start a collective investment trust and we had kind of a methodology picked out, we need to go to someone like you to execute our trades, right? Like to help us kind of build all the infrastructure underneath. And is that what Wilmington Trust, which is what you guys spun out of, that's what that company would do for like mutual fund companies as well. And I know you might think like, how do these guys not know this stuff? Because I can tell you everything about record keeping, and I can tell you everything about advisors and all the different fiduciary roles. But somehow in our kind of micro and small market space, especially like south of 50 million, am I wrong, Chad, where the concept of the custodian or the trust company never really gets discussed or talked about?
Very seldom. And it's usually who's ever the record keeper is attached to in that space. And that's it. It's not discussed. It's a byproduct of the record keeper that's chosen.
That's a great next question for Rob. So when you say 200 plus record keepers, when I look at Voya, Nationwide, Empower, John Hancock, these like record keepers, they do their own custodial work and they have their own trust companies, right?
A lot of them do. And so, but they're special purpose trust companies, and they may only be doing light work on the plan so that you can get a limited scope audit, as opposed to having, broader trust capabilities to do CIT work, right? There's acronym number 2.
Had a check swing. You could have had a check swing there. So is it your company's strategy to might a Nationwide or a Voya, and it's not to be a specific name, but someone like them, one of their peers, would they come to Great Gray just because they really want to get into the collective investment trust game, but they don't have those skills, or they don't have them in a great way, and then so they would end up partnering with you guys as well? Or does that already happen?
A lot of that already happened. So we've been partnering with a lot of those firms through, for the last 5 or 6 years. I think we first started building collective investment trusts that were platform specific for Mass Mutual. And ultimately that was sold to Empower, but we do it with Voya, Nationwide, One America, a number of others.
This is an interesting business model, Chad. If you think about it here, he not only works with the record keepers, but he also works with other custodians, and a big part of the business is working with what I'll call the asset managers, or even though it's not applicable in this case, the mutual fund families. But yeah, the mutual fund families that want to create a collective investment trust. You kind of got your hand in a lot of spaces here. I was going to say cookie jar, but that seemed evil, so I didn't want to use that analogy. You just got your finger in a lot of things. Chad, sorry, you had a question. I kind of talked about it.
Not really a question, just I think I'm piecing it together along with you. And in my mind, the way I kind of see this spider web growing is that the collective investment trust placement is coming through Great Gray. So yes, the advisor that wants to create this collective investment trust wants it on different platforms. So they're going to go through Great Gray to get it out into all these platforms. So my initial thought was more of you as a custodian. And now I'm thinking almost more as as a distributor of the collective investment trust that people are trying to get out into the marketplace.
Talk about, Rob, how you see distribution and how your firm kind of helps with that or deals with that
Yes. So my compliance and legal teams will kill me if I don't say that first we're the trustee and the fiduciary of the fund. So before we get to distribution or placing it on any platforms, we have to go through a robust process of doing all the fiduciary work to see if we want to launch a CIT.
AKA, you're not going to help us with the Retireholics collective investment trust. I understand. Thanks for the.
You got to see what Robe Guy's drunk stock picks are doing, though. I mean, the dude knows how to invest.
I get it. You got to do your due diligence, but then kind of explain to us, like, it sounds like maybe it's a multifaceted role in terms of distribution and how you.
It definitely is, but I can't wait to sit down with Robe Guy and understand his investment process. So
It
Shall we
won't take
show 'em
long.
tonight?
You got a couple minutes. It's really simple.
is it? Well,
It's simple.
anytime, sit down and want to learn about your, well, I'll bring my investment people and they'll be.
No,
excited to
don't
learn
do
about it.
that. Don't do that. Yeah.
Oh, you should. He's flawless. Sorry. Tell us about
Well,
distribution here.
So on the distribution side, since we're a fiduciary and these funds need to scale, we believe that we need to be part of the distribution process to ensure that the right outcome is coming for the end participants. Because if the funds don't scale, fees and expenses can be too big. You can see dispersion in performance, right? So we want to make sure that is part of this. So whether that's platform placement, whether that's working with advisors to educate advisors on CITs, making sure that advisors understand what CITs. That was a double take.
That was
Yeah, you can save them up. You can save them up. And when he says distribution to the, what did he call them? The product ones, that's like you said earlier, Broadridge, like some of what I would perceive to be your competitors. But no, if American Century creates a new collective investment trust and they're working with you to kind of create it, they need to be on those other custodians, right? Like they gotta be. So
yeah, they do. So you want to be able to make sure that the collective investment trusts are on a broad set of platforms in order to be able to be available to all of you advisors, right? And so our job is to make sure that we get the collective investment trusts on various platforms, make sure we have the trading agreements, make sure we have solid relationships with those trading platforms, and then be able to articulate availability across the trading platforms to the advisors so that when they want to pick the Retireholics collective investment trust, then we can say where that's available and make sure that your plans can trade it.
I get so confused. This is because I started drinking at 2 p.m.
Well,
I know that distribution makes sense to me, but now I'm going further with, but do you also do not exactly, do you do the same kind of trade? Like I go to, Aspire or, and I'll drink for this, or PCS. I used to go to them as an open architecture, independent record keeper. I'll drink independent record keeper and I'd have a choice to choose my custodian. And I could choose Matrix, or I could choose Mid-Atlantic, or I could choose Schwab. Will I now be able to choose Great Gray or no? Great Gray is just working. Well, I know if I wanted to use collective investment trust, would I also use Great Gray? No, my bad. You're only going to do collective investment trust. So you're not going to be trading mutual funds and shit. So now that makes perfect sense to me. You're working with those companies, create the collective investment trust. And yes, of course, get them out on Matrix, get them out on American Trust, get them out wherever, Schwab, everything.
Yeah, we're the latter. So you're not going to come to you're not going to look for a Great Gray collective investment trust. You're looking for a BlackRock collective investment trust, a MFS collective investment trust, the various sub advisors that we work through, Franklin Templeton and the like.
What was it, Jeff?
I don't know it, but hold on.
He said, yeah, and it's the.
No, I didn't say CIT. I said
Yeah,
Now you did.
And now I think I see your genius. If I want to get in this collective investment trust game, or hell, maybe I'm already in it and I'm doing pretty good. I got a pretty solid collective and trust target date fund rocking and rolling, but it's with one of your competitors who kind of does all things. Great Gray could become the place where you guys specialize in this space of collective investment trust. And I may move my business to you. Surely new ones that pop up that are going to consider you, since you're a specialist in that. And you're no new kid on the block, because you're a spinoff from Wilmington now with, 150 billion and backed by fancy pants investors, Madison, whatever. I went to their site. It's all the companies they invest in. So you're trustworthy. Roby, is that what they call it? A trust? You're trustworthy. I just connected those two things.
I don't think that's why, but go on.
The trust company. Am I getting the business model right, Rob?
You're getting there. You're getting there.
I'm getting there. It's slow. Chad, let's dive into collective investment trust and kind of the growth. Let's see if Rob's on the right track. You got a question?
Well, real quick, because I posed it to Shories in the chat bar, because for so many years I felt like I understood this concept that and the benefit of creating a collective investment trust. But I never really understood how there was this fee compression and this thought that it's less expensive and cumbersome than others, like a mutual fund, for example. And Shories was saying, you know, there's no prospectus needed. There's less
Wow.
filing requirements. So Rob, are you possible? Can you give me like a 30-second overview of why the growth of collective investment trusts and what's the ease of them versus alternatives?
So a lot of the growth is attributed to the collective investment trust being able to be traded through, I'll do another one, NSCC, starting back in the early 2000s. And
I
then,
gotta look that one up, just so you know. National
And then-
State Community College, okay.
so we started trading parity with mutual funds, but then what really moved it along was legislation, fee transparency and the like. So remember back in the early 80s or the early 2000s, it was free 401ks. All you guys sold free 401ks, right? Rev share put into the share classes, and you got your 12B1, and there were revenue share agreements, and 401ks were free.
We have
But,
far more integrity than that, Rob. But yes, we understand what you're saying.
But then came along, 48B2, 40485 with fee disclosure. And
Now
as
we've
people
got
started to see the fees,
institutional
they
share
were,
class of funds and everyone
Yeah.
that can see underneath the hood. Yeah, yeah.
and then everybody started to move to the R share classes, and then CITs became much more interesting because active managers started to jump into that space.
Yeah. I have some. I can prove the growth here, and then follow up with you a bit, Rob. But let me go back to what Chad asked you, because it is the lower cost, because that's how we are as human beings and as advisors. We see like, okay, lower cost is attractive to us, but Chad's question was like, well, what's the difference? And so explain to us this less overhead that's involved when running a collective investment trust. Chad mentioned the prospectus, but it's a lot bigger than that, right? There's a lot less oversight and things you have to do.
Yeah, so there is. So here's what it is, right? So yes, we don't have a prospectus like a mutual fund with a collective investment trust, but the regulatory bodies are different. So we're governed by either the Office of the Comptroller of the Currency or a state regulator, when the mutual funds are regulated by the Securities and Exchange Commission. And
Well done.
I
Yeah.
literally said the acronym.
so why the Securities and Exchange Commission? Because of the retail investor. So if you think about the retail investor, that is your lowest common denominator. So more disclosures to the retail investor, which means they're pulling all of that into it. And with collective investment trusts, what we have is state regulator or the Office of the Comptroller of the Currency, but then we use a disclosure agreement, a declaration of trust, and that's how we do all of our communication of fees, investment objectives, and guidelines and the like to the plan sponsors.
Collective investment trusts, Chad and everyone out there, outside of the 401k space, could be sold and can be sold to accredited investors, right? A certain sign of net worth kind of income, not this lowest denominator that you're talking about, or no, you're shaking your head, no, they cannot.
Collective investment trusts are only available to qualified retirement plans right now.
Yeah.
So 401ks, 457 governmental plans, defined benefit plans.
403B soon, right?
Okay,
Nope.
that's gonna bring up some.
We're
I got
working
some
on 403Bs. So
Yeah, right. We'll get to that.
We got-
We'll get to that in a second. Okay, so my bad. So I was about to throw some numbers at you, and I just jumped to the conclusion that these collective investment trusts were with individual, like deep pocket investors out there. But no, there's other things outside of 401k. But in that same kind of vein, as an accredited investor, you are allowed to sell these to a retirement plan, because a retirement plan is that kind of vibe, right? It's not some poor individual person working for a company. It's a bigger entity that you can count on making a proper fiduciary decision and vetting out that investment. I remember selling one of these to my client a long, long time ago, and the paperwork was through the roof because it was really early on. And I remember reading all that paperwork, and that what it was all about, was like, hey, you got to understand what you're getting into here, because it doesn't have the same protections as a mutual fund. But, and I don't want to say that in a negative light. Now these things are very popular. Let's talk about this. So total assets in collective investment trust. So this is not just 401k. So this is all those other areas that Rob just mentioned. And Rob, if you don't like some of these numbers, shout them out. But there was 2 trillion in 2012. And now in 2023, we're 23, are north of about 6 trillion or something like that. I don't know, I'm kind of guessing. He nods in approval. Okay. Now let's talk specifically 401k. In 2021, there's total in 401k total, there's 8.25 trillion, not collective investment trust, just total assets. But of those total assets, of that 8 trillion, there's 2.7 trillion were in collective investment trust. So that's a pretty good chunk of market share. And I'd imagine that's way up market. Am I wrong, Rob? Like, that's got to be like the big plans that they're very comfortable with them and have been for a while. You agree with that?
It's a lot of the big plans, but what we've seen is the aggregators, the independent advisors, and even the wirehouses are starting to really adopt collective investment trusts and making a collective investment trust available in the same strategies that they are in mutual funds. So they're approving the strategy and then looking at the vehicles and choosing what vehicles to offer to their clients.
That's interesting. This kind of ties in the next stat I was going to give, but let me go straight to a question. We are seeing a lot of the leading mutual fund families that have created successful target date funds in the retirement plan space, because we all know that's the most successful mutual fund you can create for 401k, right? Like, you get a good target date suite going, you're going to get a lot more assets these days, and some kick-ass large cap growth fund, for obvious reasons. Like, we have huge defaults into these things. They're kind of everyone thinks target date funds are what they should be using, and the adoption has gone on through the roof. So when we see these companies, and I don't mean these ones specifically, but American Century, Fidelity, T. Rowe, whomever are kind of leading, Vanguard, leading this space in target date funds, have many of them already created their own collective investment trust version of that target date fund?
I believe a lot of them do. I think all of the leading target date providers have collective investment trusts available in the same strategy.
Right. And if they don't, once they see these numbers, they probably want to. There is a National Association of Plan Advisors article from earlier this year, and I'll read from it. It said, consider that at the end of 2017, mutual fund-based target date funds held 63% of target date fund assets compared to 37% of collective investment trust-based products. So 63 to 37. At the start of 2023, this ratio has changed to 52% for mutual funds and 48% for collective investment trusts. At the current rate of change, this is from, again, I'll say it, Napa. At the current rate of change, assets in collective investment trust target dates will top those in mutual fund target dates in 2023 calendar year. Rob, do you agree with a lot of those numbers? And do you know, has the National Association of Plan Advisors prediction come true? Have the collective investment trust outpaced the mutual fund, or we don't know yet? Maybe, huh?
We don't know yet because I don't think 23 is over, right? So we'll have to wait till the end of the year and let's really run their stats, and then maybe Brian can tell us whether collective investment trust passed mutual funds or not.
What would your best guess be based on what I just told you? 52 to 48 by the start. It's going to be close, I guess.
It's going to be close. You got to imagine that we'll get there.
But inevitably, you will get there. And I think to your previous point about the aggregators, they're going to have a lot of those $20 million plans, $10 million plans, $5 million plans. And if this is what they do in their $100 million plans, and they feel like it's the proper fiduciary decision for someone to I looked at an article that showed me that I was going to ask you the difference in cost, and I will. Let's see if I'm right on this. So they say it's a lower cost. Okay. And I know this is tough, but if we go apples to apples, and I'm an advisor trying to help my client, and I've got a certain target date suite, and I want to offer them another target date suite and the collective investment trust. And let's pretend we're in a fantasy world, and those are both like same methodology, same fund company. There's no real difference. I'm trying to get the cost differential here, which I know is, it can't be perfect, right? Because things can change. But what do we think the difference is? And I saw something that showed me that it could be anywhere from like 10 to 20 basis points. Do you think that that's accurate, or?
Well, I hope not in the index space, right? That would just be too much of a
There's
spread.
not much margin. Yeah.
There's not much margin, but if you look at where the majority of target date assets are, they keep migrating towards the index space. But as you think about the bigger plans or the aggregators or the 338 providers, we really haven't talked about the 338 providers because they also have a lot of say in how this plays out. Because when you look at the asset managers, they're looking at how to price business, and they're thinking those 338 providers, maybe we'll give them a price break across their whole book because they have discretion, because they believe they can drive the assets in.
So they can get a little more, a few extra basis points based on their quantity. I saw you and Todd Kading hanging out in a LinkedIn post. It made me think of managed accounts. Yeah, you're right. We hadn't talked about that yet, you guys. There's a managed account kind of Venn diagram here too, similar to a target date fund, where they might use obviously collective investment trust and then need great grades to help them kind of sort this out and get distribution on those platforms, right? The managed accounts.
Yeah. One thing we've seen with managed accounts is income is easier to bring into managed accounts through a collective investment trust. So if you're thinking about your advisor managed account, or even some of the platform managed accounts, is think about how income evolves, whether that's like Income America or TIA Traditional or some of the others wrapping.
I think you have to ring them up for that. That was a teacher.
Yeah.
Oh man, I don't know what TIA stands for. Who knows what TIA stands for?
Well, don't say it again.
Someone will throw it quickly. There we go. Greg says I do.
Let's save managed accounts. We can talk about that a little bit later. So I know it was great to hear from the guests, but one more time to Justin, to Mark, and to Chad to chime in, help everyone understand you guys play in that startup, 500,000, 2 million, $10 million, $20 million takeover space, but focus more on that kind of 1 to 5 million. Are you seeing these available? Do the record keepers allow for them? Yes. Let me know what
a lot of it, truthfully, a lot of what I'm seeing is broker dealer specific. And so you have some broker dealers, you also have some like One Digital that have pushed to have their own collective investment trust built out and put within these products. Like One Digital and Empower have a relationship where their collective investment trusts are available on the Empower chassis. So I'm seeing it not from the one-off advisor and actually not from the record keeper, but more so from the broker dealer and some of the independent channels.
And let's confirm for the dumb surfer guy who started drinking it too. And I know maybe One Digital is not a client of yours, Rob, maybe it is, but when One Digital wants to create that collective investment trust, Chad, they got to go to somebody like Rob, right? To build it.
I think so, from what I'm learning tonight. Yeah.
What we've learned tonight.
So I think there's two different ways about how all of this comes about. And so if you think about a One Digital, so we'll use One Digital over here on the left-hand side, and we'll use how about FlexPath NFP here on the right side. NFP got another one.
Yeah. Okay.
We might have to start drinking some of Rob's.
I don't know why those are left and right. They seem very similar to me, but continue on.
They're very different. So over here on the left-hand side for One Digital, what we do is One Digital, there are One Digital share classes, and that's the same for a hub or for some of the other aggregators. So they're going to asset managers, asking them to create a One Digital share class, and then whoever is the collective investment trust provider for that particular fund, they create the share class.
They're just the share class, meaning they're branding an already existing collective investment trust.
Yes, so if it's the MFS, large cap value, there you go, there's another one.
I get you. I can get you.
Okay,
So
okay,
if it's their large cap value, then there's a one digital share class. If
got it.
over on the other side with.
Whereas Vince actually created his own frickin' FlexPath thing and brought it to someone to.
Yeah, so FlexPath is the sub-advisor to the collective investment trust. And as sub-advisor, they get to choose or make recommendations on which asset manager underlies the collective investment trust.
Etc. Yeah, okay. Here's what I want everyone to know listening in is there's this, I don't want to call it a messy little world. There's this like exciting little web of things happening underneath the veil or the curtain of what, at least for me in this industry, and I think a lot of my peers, we focus so much on record keepers and mutual funds and expense ratios and fiduciary process. We don't tend, at least I don't tend to understand underneath all these kind of dealings that are happening. And it's fascinating to me. Like, go ahead, Chad.
I was just gonna say, in my mind, when I first started in this space and everything was about loaded share classes and what share class could you get a plan down to going almost every provider being fully institutionalized lineups, it was larger plans had institutionalized lineups and it was starting to bleed down into the smaller market. And that's the same thing I felt for collective investment trusts, is I feel like when we're randomly involved in a $100 million plan, these conversations come up. And over the last 5-6 years, I'm starting to see it in $5 million plans, $4 million plans, $3 million, like this upper market. We don't spend much time learning about it is now down in the micro space. You have these aggregators that are involved in that space and creating margin with billed expenses, and they're putting their collective investment trusts front and center to that client and saying, you can't get this anywhere else. Now you're getting it down at the $1 million plan or the startup plan because you have us as the advisor partner on the program. It's brand new to me, meaning last 3-4 years, but I think we're going to see it more regularly moving forward.
Rob, can I put you on the hot seat real quick and then we'll play a game? When we talk about FlexPath and we talk about one digital CITs, I've had I've had clients in both those scenarios. So as a third party administrator, and I know I got a drink coming, I've had clients in both those scenarios where the advisor pitched both those solutions to the client. And the client came to me and said, JD, is this okay? Like, is this on the up and up? Like, it seems a little weird that our advisor is pitching something to us that seems to be kind of proprietary in nature or homegrown. Like, is this a good decision or a bad decision? And in both scenarios, obviously, that would probably freak Rob out. I'm not a fiduciary. I'm not their counsel. I'm not an attorney. But I looked at it and said, look, they're a big company. They've done this or that. I think you're asking the right questions. I think you should ask more of them. But in the end, if you feel like it's a prudent choice and in the best interest of your participants, you're getting a cost savings or whatever, it might be the right choice. But obviously, I can't step in there. But my question to you is this the right direction for us as an industry? And or do you think Schlichter and his peers are licking their chops with this? I'm not certain it was Schlichter that went after FlexPath and National Financial Partners. Maybe it was. I think it was one of his peers, but it doesn't matter. An attorney went after them for this very reason. They thought it smelled a little funny and reeked of conflict of interest. What say Rob on all this? Is it a conflict of interest? Is this the right direction for our industry, et cetera, et cetera?
Wow, that's a lot to unpack. That was rather. How many questions do you think were in that?
I think it's kind of
I think
one
it's like
question,
8.
Rob. Is
Well,
one
Rob,
question.
usually JD also gives you the answer within his question. So you just gotta go back and
Really, it's in all seriousness, all funny jokes aside, it's real one question. Is it okay to do something like this FlexPath and this one digital thing?
So again, I think they're two different models. So as you think about the two different models, it's trying to understand what the value is that's being
Well,
created.
the gnarlier
in the
one,
model.
the gnarlier one, Rob, would be the FlexPath one. So let's put that one on the chopping block then. So is that dangerous or not? Like, is being done? And by the way, just because it's being sued doesn't mean it's, anything wrong has been done. There's been no judgment or anything like that.
Yeah, so I think in that model, the way I see that model is that there are multiple managers offered across each share class or each asset class.
It's diversified.
So it's diversified. So I'm not going to name manager names because there are acronyms in there. So I'm trying to learn my lessons here to go through. But in large cap value, there's large cap value 1, large cap value 2, large cap value 3. They have different price points because of the fees that were able to be negotiated with the various sub-advisors. And they have had changes in terms of the underlying sub-advisors. So I don't know if that's any more proprietary than, an insurance company separate account program, because it's very much similar. And, there's scale pricing, all of those items.
This is why you're here. That to me was a Rob Barnett answer, that you didn't dodge the question and you answered it super intelligently. I agree with what you just said there. I'm not ass kissing you here. Like, you're right. If you were to compare it to other options, it's no less prudent than those options. There's a solid methodology behind it. It's clearly not some kind of play on proprietary stuff. You can defend it. So yeah, fair enough. Well done. I also, not as intelligently as you, I'd like to jump on the Vince G side of it too and say, why is it that the mutual fund families get to have all the fun when it comes to creating investment options? Like, who's to say in an innovative world that the financial advisors themselves, especially if they're bigger firms at scale and have the teams to do it, the chief investment officers and the methodologies, why can they not get into that game too? When did we say that those were the rules, that only the big Fidelities and the American Centuries and the T Rows and those people could do that? So God bless them for trying to do something different. I'm not trying to knock them down.
So just focus on the Department of Labor's 2013 Field Bulletin, and we'll talk with you about when you're looking at target date funds, what a plan sponsor should think about when they are considering a target date suite. And one of them is a custom target date suite. And that's where a lot of what FlexPath was born from.
It was born from the RPAG, damn it, methodology, right?
That 2013 Department of Labor Field Bulletin gave everybody an opportunity to really think differently. And so if, we take the legal or the guidance that's put out there by our regulators, we can think about different ways to help advance our plan lineups and create better outcomes for the participants in the plans.
Very cool. Okay. I love this.
JD, I'm surprised you could pass the RPAG FlexPath conversation without acknowledging when we were sitting in that conference and all the investment companies were in the back of the room and they announced this product, and the ones that weren't part of FlexPath were not happy about spending $100,000 to be in that room and the announcement of this.
That's a slightly different debate in that were they upset because of the money they pay to put everyone up at the Ritz in Laguna Niguel, or were they upset because they were going to get only a tiny sliver or sleeve in this new FlexPath product, or
they weren't all involved,
or they weren't on it at all, or they're upset of some combination of the both? I don't know, but you know what, Chad? In a sense, this is where I become a fan of Vince, and what they did is like, I don't give a fuck. Those are large Fortune 5, well, maybe they're not all Fortune 500 companies. These are big corporate entities that have been, getting assets for years. And so to Rob's kind of more intelligent thing, if the world starts to change and we can see opportunities to create new kind of solutions, then I think we should. I think
gotta roll.
Yep. I might talk a little about that later, but let's play a game. It's the totally original, totally cool, whatever. Tony, no one's selling their soul here. Sometimes I'm afraid
Speak
Vince,
for yourself.
sometimes I'm afraid Vince is gonna come up and grab me by the neck at one of these conferences, all the shit talk I've done on this show. Okay, the way this works, Rob, is I'm just gonna bring up something from the general world, pop culture, living life, whatever. And you're gonna tell us if you think it's dope, thumbs up, or nope, thumbs down, and then maybe a little description as to why. The first one I'm going to give you is, you're in the industry and you get interviewed for a magazine like the National Association of Plan Advisors magazine, like Chad recently was, and you get some quotes and they put your picture in the magazine. And then a few weeks later, they send you an email and it says, hey, would you like to buy this wood framed glass thing you can put up in your office to show everyone how cool you were when you got interviewed in this magazine? It only costs you $500. We'll make it for you and send it to you. Are you nope or dope on this, Rob?
So is this a precursor? Am I going to get this from you? Are you sending me?
I love that idea.
That's a great idea.
Yes. A
Fuck,
still frame of Rob sitting on the show. That's so great.
Brandon, take note how we can actually start making some money on the show. Okay, sorry, Rob, go on. No, but it's not, but great idea.
That's not dope, man. Nope.
No, I don't think an explanation is needed. Although let's ask Chad, because everybody, Chad texted me a few days ago.
It
and
was in
said,
joking manner, but in a serious nature at the same
Oh
time.
shit.
hey,
Yeah.
can I buy this thing and can we make it a company expense? What do you have to say for yourself, Chad?
So the way I wrote it is, I said, is office decor counted as an office expense in joking nature because I'm intending to buy it for myself. I think it's dope, dude. In 30 years from now, I want to look back and be like, yeah, we sat on the cover of 401k Specialist and I was in these different that's cool. I'm
Well,
pumped
that would
about
make
that. And
sense,
my kids Google search our name and they see our shows on YouTube and their friends are like,
boy.
what? That stuff is awesome.
Do they
That's
they
cool.
see my IMDb? Oh mother.
Nope, we've been through that. They do not see.
Chad,
don't even
that
know
would
what that
make
stands for.
perfect sense.
I'm
that
in.
that you're the one that feels that way because you're the only one of the four of us or five of us, including Brandon, that actually has our cover blown up to some huge size on the wall in your office. So
Yeah, we stole
Hey,
that at the conference.
If there was an extra one, I'd have it too. I think it's pretty sick, man. I
So
think it's
Rob, I
rad.
disagree with you. It's dope.
Justin's dope on it. What do you say, Roby?
Oh God. I don't know. I'm torn a little bit here. I think all right, here's what I'll say. It would be dope if it was actually something cool, but because what it actually is in Chad's specific circumstance, it's a nope for me. But if it was like, I don't know. Magazines are lame anyways. Who buys them? So no.
Nobody does. Okay, great. Chad, don't buy that thing. Come on, don't be a sucker.
I'm doing it.
All right, Rob,
Totally
next
doing
one. This might seem a little nerdy and maybe I'm way off with something here, but I think we've all been on a lot of Zooms and I'm on Zoom all the damn time. And nope or dope on someone on the Zoom deciding to share screen without getting approval from anybody else. Like all of a sudden someone's sharing their fucking screen and they never asked. Does this happen to you? Do you have any feelings about this? Nope or dope?
That's a pretty solid risk there. What's on the screen? Like if you don't
It's work
know,
related. Yeah, it's work related, but it's like, who
Work
said it was
related?
your turn? Who said it was your turn?
no, that's a nope. Got to talk through it. Got to share what you're going to share. Get consent.
I'm with you because Chad, I just think I'll go to Justin first. Justin, what I think is if I want to show you a graph or I want to show you something on my work, I got to ask everybody first. Like, hey, can I share screen?
I mean, if it's work related, I'm just gonna say, hey, I'm gonna share my screen real quick and show you what's going on.
There you go. That's a compromise.
But
At least
if
you
they're just sharing, then yeah, like what? I don't know. I don't give a shit.
imagine, Mark, imagine there's 6 people on the call or
Hey,
8.
hold on, I'm trying to share my screen right now. Shut up.
Imagine there's 6 or 8 people and all of a sudden the screen goes up. I don't even know who fucking shared the screen. I don't know who's showing me this.
Is this still
Is this
something
happening with our
you can
team? Like, what happened? This is definitely personal.
Yeah,
All I can
feel
say
like
is
this is
if it
personal.
Is that a
makes
Brandon thing or Samara? What happened? Brandon, what
if
did you do?
if it makes sense to share the screen, then good. But that person better be prepared. Like, pull it up, go to what you got to get to. Don't be fumbling around. I don't like it when someone shares their screen and then we see their email or their Salesforce or their Amazon account. Like, you got to be ready to do it and do it properly. So, no Kush, no
Someone
porn.
was going to say, Kush.
You remember when these video chat things first came out for work, when someone wanted to share a screen, you had to like give them permission if you were the host.
You can still set it that
You
way.
still do it that way, yeah.
Yeah.
Doesn't seem to be the default these days. I'm just saying. Okay, this one's going to be personal for me, so I actually need everyone's advice on this. Okay, and I'm going to start with you, Rob, as we always do. And this is real. I'm here in Miami. It's duly noted. I've been drinking since too. Going to a rooftop frat party when you're 52 years old at 10 o'clock tonight. Nope or dope?
Wouldn't 10 o'clock be pretty early? Would you be the first guy there?
Thanks
does
for
have
that
a
advice.
bedtime.
They did say like between 10 and 11, and you're right, Rob. I would show up at 10 and be like the only guy there. So good advice. That helps me out. But I'm contemplating I've been invited to a frat party tonight. Should I be going to this or not? I mean, I have visions of Will Ferrell asking everyone to run naked through the, what is it? Through the,
Quad to the
Quad.
Through the
gymnasium.
quad.
Let's streak the quad. Are you hoping Snoop Dogg's there too?
Hey, if you bring a green hat, you can do whatever you want.
honestly,
Yeah,
Rob,
okay.
what do you think here? I need your advice.
I don't know, man. I gotta think that's a nope. That's tough, right? What if a client finds out?
What if the client's
Rob.
there?
Oh,
I'm-
that's worse, right?
Uh,
Well, it depends. Is the client running with him?
Come on, Roby. This is
So, all right, Julie, because I can't answer.
Greg, I don't think
this.
they have enough time.
I can't answer this for myself. I can't answer this for a universe. I'm answering this for you specifically. I would say everybody up here on this screen right now wouldn't be able to make it through except for you. Like, you're the one guy who will be the entertaining guy of the party. People will talk to you. Like, I'm sure your son invited you for a reason. Most stuff to be like, no, my dad's not cool. You're good, man. I think you go. Also, I despise your Instagram stories of concerts and all that, but you better have an off the rails Instagram story tonight following your adventures. I want to see beer balls. I want to see keg stands. I want to see tops off. You, not anyone else, not girls, boys, just you. I want to see JD having the time of his life.
well, I've been invited. Justin, are you okay with this? Because I'm going.
I was not at first, but Mark just said it. If you're going balls to the walls like that, I absolutely applaud you and I'm all for it. But otherwise, if you're just going to sleep on a couch and do nothing, fuck no.
God, I know you're nervous about this, but
no.
believe it or not, some of the guys in the frat have watched our show before, and they came to Tristan and they're like, you got it. Your dad's got to come to the party, man.
I immediately regret this decision.
Here is the moment you said it, JD, my mind went to your son is asking his 52-year-old dad to come to a party with him at the
That is
college he's
badass.
going to. Like, of course you got to go. I mean, there's very few
That's a good
fathers
point.
in this planet that would get that offer. I hope that one of my kids asked me to go to a party. Exactly. So yeah, you
No
gotta
chance,
go.
Chad.
Soak that
Take
up,
notes.
dude.
When Chad says
Dad would
that,
be really asking everybody, what's your major? So what are you doing? Like, how do you study every day?
We're looking for an intern.
when Chad,
I was in Napa one time. Fuck.
Yeah. Do you want a career in financial
all right.
services?
Let's move on to Chap Our Champion, shall we? Let's see. Last week's winner was the sexiest legs in 401k, and Hackler, I'm assuming, will be at Wealth at Work in Washington District of Columbia.
Yeah, there you go.
And so we owe Hack and Cush prizes that we will deliver at
Two
Welfare.
greats to get.
I feel like we
prizes
owe a lot of people. We never hear about it anymore. Did our accountant like
No,
put
we're all good.
the kibosh on that, or?
All good on everyone. We're all square except for Cush and Hack.
Oh.
We're all square. Let's see.
You'll never get it.
No, yeah. So let's go to the votes. Let's go to the votes. Shall we? Let's go to the votes. So your vote for Chat Bar Champion, Chad Johansson, is who?
Oh, you were gonna go to me first. This was a tough one because there's a lot of good comments tonight. I mean, I hate, especially because he just won, but I feel like I can't go Hack. I feel like Hackler's night was good.
This was good. The
It was
Schlichter and
it
Watson
was
comment
good,
was
but I'm not
good.
sure it was great. I'm not sure it was. Yeah, I'm going Hack. It was good. It was
Wow,
better than anybody else.
Back to back could be. That's a comeback shit happening right there. Justin, your vote?
By the way, Hackler was late, so that's impressive. Yeah,
That's
that's like missing the first quarter, but still putting up a triple double.
Yeah, even better.
I gotta. Sorry, Webby, you were solid with your sit corrected comment, but I gotta go Samson with the Roby looks puzzled comment. That gave me a good giggle.
I was
Samson,
puzzled because JD says he's got all his fingers in a lot of things, and I said, "That's not how you say that."
well, I said hand in the cookie jar,
That's why I was puzzled.
and then I said finger in a lot of things, which I think that's accurate.
Your finger in a
I
lot
think
of
that's
things.
why your son invited you tonight.
I think we should move on from that
No,
comment.
fair enough. Fair enough. Fair enough. When Chad's telling you to move on, you know you fucked up. Road guy, your vote?
The one, the only,
Daniela, she's not even here, Mark.
Greg Greenfield.
Whoa.
He was good.
GG.
GG was awesome.
All right,
Yeah.
Rob, got to pick someone from the audience that, floated your boat today.
We forced you to get to an iPad. Could you see the chat bar, Rob?
Yeah, I kind of could see
Good.
the chat bar. So
Right behind him.
I got to kind of read it over the top here. I don't know. Hackler's stuff was pretty good, pretty solid.
Yeah. Okay, good. So Hackler, I thought you were going to be a wussy and vote for do I have to drink for this shit for
Someone
TG?
that came from his crew. We've had that too many times. I'm proud of you, Rob. Thank you for that.
Oh God, the vodka's getting worse and worse. Usually gets better.
You just got a back-to-back win.
Well, it's still up for grabs.
Oh, you
here.
got. I forgot.
I'm also going to vote.
Yet.
I'm also going to vote for Hack because, no, excuse me. I'm voting for Sampson because
Ooh.
his well-timed. When I said guideline, he just said,
Sucks.
it was a classic, but just well-timed. So I think we have three, right? We've got Hackler, Greg Greenfield, and Jim Sampson. And you know how this
I
works.
think that Gigi only got one vote.
Yeah,
So it
but
should
you
be
owe a
Hack
drink
and
for that.
Samso.
He's not even here anymore. Either.
No. This is not how this works anymore, guys. Where have you been? All three make the final. Robe guy now has to tell them what it is. They have to finish their sentence. in the
Oh, I
final.
thought it was always okay.
No.
All right.
Okay, Roby. So we
Right.
got three contenders
Yeah.
for the prize, and they need to finish your sentence. Take it away.
Well, I guess got to be honest. Greg's not here anymore, so we are just down to.
I got news for you. Don't put your money on Greg.
Yeah, okay, great idea. All right. Okay. Once again,
I mean,
Should've been
Hack's
more-
comment right there might just win it.
yeah, I gotta be more prepared next time. I will say last time Brandon said have like a bunch of questions ready to go. I was like, that's a stupid idea. Okay, how about this? If
Missed opportunity.
I'm just gonna say, this is about me. If Robe Guy decided tomorrow to replace the robe, what would he replace it with?
Okay.
Go.
Okay. All right, Rob. Watch the answers coming in. And we're looking for just two, Samson and Hackler. Banana hammock
Oh,
from Hackler. That's a leader. That's solid. That's solid.
Which-
Hack.
Wait, but it was Samsonite who had that original comment.
Is it?
What?
Yeah.
Oh,
I'm
no,
not-
originally, earlier in the show.
Samson, Samson and I, he had the comment about Hack being in a banana hammock.
That's so meta though.
That was
That's
great.
smart. That's strategy. He basically took his, winning thing from him. before he could do it.
Okay, who are we waiting for?
Right,
Samson?
yes.
We're
This-
waiting for Samson at this
Yes, we
point.
need an answer now.
Samson fell in to Hack's comment.
I think he's screwed.
He
I
did.
think Hack's going back to back here. Like that was, as Hackler called it on himself, that's some next level shit. That was my comment. Okay. I'm calling this one. I'm calling this one. It's a knockout. It's a KO. Hackler goes back to back.
He came up with a kimono though. Come on.
Well
You
done,
wear a kimono.
Hackler. Well done, William Hackler. You are
I've
a
done that
multiple
before.
winner.
I've done that before, Rob.
Yeah, for sure. That's right.
You're a multiple time champion. I believe you're even the owner of the one and only Brandon mug. You're just becoming as Kushner puts it, you're becoming a legend. Let's see. We are going to be at Wealth at Work. So what's next for us?
Like
I
2
was
weeks.
hanging out at La Costa, 5 minutes down from my house. I didn't realize, but there was a Linsco private ledger conference happening at the same time. And I was meeting with our buddy Kate Clark, Chad, and just having a beer. Kate, my wife.
She's a beast. She's so awesome.
I had Maddie Hunter come and sit down at the table with us and have a drink. And the waiter brought to me an old fashioned and said, "This is courtesy of," and I thought, oh no, is there some hot chick at the bar trying to pick up on me again? And he brings it to me and he goes, "This is courtesy of Mrs. Brandrup." And I'm like, what? I have no idea where he is. He's somewhere in the room. And there he is at the bar with his wife. I got to meet him. I got to talk to him. He bought me a drink. So
Oh man, that is awesome.
it was really cool to see one of our Retireholics family out in the wild and buy me a drink like that. And then Chad, it looks like, Chad, you came in from a golf event recently, and what happened?
Yeah, I finished on the 18th hole and there was we're in the after show now. So our DCIO partners that had brought in Malort for me to drink, sitting on the 18th hole, waiting for us to walk off the green. And we all had shots of Malort waiting for us. He flew in and brought it from Chicago, knowing I was going to be at the event, and had it waiting for us.
I saw like half a
That's
dozen
epic.
people there waiting
Yeah.
for you with Malorts, right, to do it. So anyways, point being, it's really cool to see some of you all out in the wild and of our little Retireholics family. So next on the agenda for us, we hope to meet new friends and see old ones at Washington District of Columbia Wealth at Work. It's pretty soon. It's like in a week or two.
2
right?
weeks,
2 weeks.
15th to
So
17th. Are we doing a show that week too?
So we'll see you there.
No,
The show's the next week, so that's our break week or whatever. So
no,
anyways,
it's not. It's the
No,
same
it's
week.
not. It's the same week.
No,
Yeah,
oh yeah,
when we
it is.
come home that Thursday, we have a show. Yes.
Oh, yeah.
Okay. You guys, fuck, come on. All you have to do is come and drink some beer. Don't stress out. Thank you to everyone for tuning in. We love you. We'll see you next time if we don't see you at Wealth at Work. Thank you to Rob from Great Gray for doing this. It means a lot to me. You know, you run a professional company. It's serious stuff. So to jump on the show where we're drinking beer and saying things we shouldn't say, we really appreciate it. You're a phenomenal guest. You have great insights, and you are a much better guest than Dick Darian ever was. So, Rob, thank you so much for being on the
Thanks.
show.
Thank you,
I
Rob.
appreciate having me. Thank you.
Thank
I
you.
would say good luck to you and Great Gray, but that's silly. You guys are gonna crush it. You don't need some stupid surfer telling you good luck. You guys got it nailed down. So I will be a great fan watching from the sidelines to see where that 150 billion grows to. And I'm also an excited 401k to watch collective investment trusts continue to make their mark on the 401k industry. So if you're an advisor out there and you haven't vetted this out and figured this out for your clients, it's time. You know, actually the time was a while ago. You need to get on this shit because it's happening. And with that, We are the Retireholics. We're changing the retirement plan industry by doing what, Mark?
Drinking lots of water, staying hydrated, and a well-balanced meal every day.
Play some music. Thanks, Rob.